morning, this is Mayor Valensky with Driving Markets. Okay, so let's look at what's driving markets today. Before we go into that, just to let you know that anything said on this piece is an opinion. Just to give a caution there that if you act on it and you make money, that's great. If you act on it and lose money, then don't sue me. Okay, so let's look at what is driving markets at the moment. At the moment, you've got, as I said continuously, you've got two major factors that are affecting markets: inflation, the threat of interest rate rises, and now you've got, as I've said for several weeks, the potential of Russia invading Ukraine. So on Friday, all the markets were stable in the US and in Europe until late afternoon, and then came out further threats that Russia is on the verge of invading Ukraine. If Russia invades Ukraine, then you're going to have oil spiking immediately to $100 plus. In my opinion, if it does invade Ukraine and it turns into a war which potentially could involve NATO, then you're talking $200 plus a barrel, which will send inflation well into the 20%, not the 7 or 8%. Also, you had last Thursday the US CPI, Consumer Price Index, major number, well above expectations. I've been saying all along since September, the numbers are wrong, and does anyone listen? Hopefully you listen, but no one seems to listen. And then the analysts come out and say, yeah, the numbers are much worse than expected. So the Consumer Price Index in the States was expected at 7.3%, and it came in at 7.5%. And that, in my opinion, is low. I think we're talking about mainly 12-13% CPI, but when you measure the basket of goods that the CPI is based on, then it's running at 7.5%. However, everything outside that basket would make it run at anywhere between 13 and 14%. The cost of raw materials is going up. The cost of raw materials is very, very expensive now. The cost of delivery is very expensive, and you're adding all those things in together, and the manufacturers, the wholesalers, will find it difficult to keep on absorbing the price because they want to maintain profits. They're going to pass it on to the consumer, which is going to be fed further into inflation. So what you've got is, you've got for the immediately next year, 2 years, the threat of serious inflation. And as I suggested, interest rates in the States will probably end up this year between 2 and 2.5%. Everyone balked at me when I said that already in December, and now they're saying yes, that could be the case. They're looking at a 50% basis points rise in March, and there's going to be, in my opinion, minimum 7 rises this year. Minimum 7 rises this year in the States, and probably minimum, let's guess, probably minimum 5 rises in the UK and in Europe. Europe is very slow to act, but there's going to be interest rate rises there. Remember, when there's an interest rate rise, it takes money out of the financial markets and puts money back into the bank accounts. So the banks will benefit, and the losers will be the high-tech companies like the Nasdaq or the startups, because that is highly speculative investment. And when it comes to investors, and they can look at their bank account and get a solid return, or they can look into their high tech and get a speculative return, they're going to go natural. They're going to go for a solid return, and that's why the Nasdaq completely fell on Friday, another 2.78%, down to 13,791. So the Nasdaq will be a continuous victim of the interest rate scenario. The Fed in the States has not been clear and has not been defined as to what interest rates are likely to be this year, and therefore that is causing more worry and more concern in financial markets, just to be aware of that. Tesla dropped to 860 on Friday. You've also got Facebook is going to be hammered again, no doubt, because that's also a significant high tech. I was looking on Thursday, Friday, maybe a potential buy on Facebook, in my opinion, of course, around about the $200 level. If it drops below that and starts going to 180, then it could look vulnerable all the way down to 150, so just be aware of that. However, I do think Facebook long term is probably a good buy. Again, that's my opinion, to be absolutely clear on that. As regards other factors, you've got the US Treasury. The US Treasury on Friday, well, especially on Thursday, spiked well above 2%, and then came down to close on Friday at about 1.92%. Remember, the US Treasury, the 10-year Treasury, is a major benchmark of where interest rates are going to be going, simply because bond investors will demand a higher yield if interest rates rise. In other words, what they'll want is a better return on their bonds than they would get in the bank, and therefore the price of those bonds will drop, which will push the yield up. And by pushing the yield up, it becomes more attractive to bond investors to actually invest and buy that particular bond. I do think that bond yields are going to jump well above 2%. I'll give you my guess. I think by the end of 2022, I think we're looking at yields on the 10-year US Treasury at around about the 2.8% level. So that's my particular view as where bonds are going to go. I think we've got at least in the short term, another 10% fall in markets across the board. That's excluding Russia invading Ukraine. If Russia invades Ukraine, then you're talking about 20% drop in financial markets. So yeah, that's more or less it, my summary of events. It's quite a long YouTube this morning. If you need any help or guidance on which platform to trade, where to trade, what is the CFD, what are options, what are call options, what are put options, just give me a call or contact me, and I'll be very happy to explain how it works and put you in touch with a platform that provide that particular product or asset class if you want to trade it. What else have you got? Or only trade regulated platforms. Cryptos. Oh, I forgot to mention cryptos. Cryptos shot up since last Wednesday. They've gone back on the bull run. Oh, it's a bit bright here, isn't it? Can you see me? Oh, is that better? Okay, I'll take it take it like that. No, like that. Like that. How does it go? No, like that. And you can see my face. Okay, so cryptos took a bit of a bull run started bull run on Wednesday, Thursday and Friday. Bitcoin is back up to the 44,000 level. Something to watch. This is Mayor Valensky with Driving Markets. Hope you well, that's it more or less. If you want to contact me on LinkedIn, WhatsApp or YouTube, and also on Instagram. I'm doing Instagram, short Instagram now for those people who don't want to listen for 7 minutes. Have a good day.